On the right, speak when you're done speaking.
soon. Oh, gosh. What do I want?
Morning, everyone. Sorry for the delay, just waiting for everybody to assemble. I'm Councillor McPherson, I'm Chair of this committee. I'd like to welcome you all to Cambridge City Council Civic Affairs Committee meeting taking place at 10 a.m. on the 3rd of November 2022. It's not 10 a.m, it's actually 10:06, but it's close. If I could just ask members of the committee to actually introduce themselves rather than me reel off the names. If we could start from Naomi, that would be good.
Thank you. Councillor Bennett, Abbey Wood.
Councillor Katie Thornborough, Petersfield Ward.
Councillor Sam Colling, West Chesterton Ward.
Councillor Mike Davey, Petersfield Ward.
Thank you very much. And those joining us online would be good.
Councillor Howard Trumpington.
Okay, thank you very much for that, ladies and gentlemen. If I could just ask the officers to do exactly the same, that would be lovely.
Caroline Reber, Head of Finance.
Neil Krajewski, Deputy Head of Finance.
Jessica Lawton, Senior Accountant.
Jacob McHugh, External Audit Manager.
I can see Jonathan Tully on the internet there. Nice way from Jonathan, thank you.
Good morning, Jonathan. Head of Internal Audits.
Thank you very much. I have apologies from the independent person, Rob Bennett. And it does say Councillor Hoyt, but he's actually with us. So, and I'm guessing that's because Tim Bickey's not here, is that correct? I would assume that's correct. Okay. Properties agenda can be found on the City Council's website under committee meeting minutes and agendas. Please try to refer to page numbers and paragraphs within the agenda if you are quoting from them. Please make sure you've switched off or silenced any other devices so they don't interrupt the proceedings. When you're asked to address the meeting, please just make sure your microphone is switched on because the camera will swing round to you. When you finish addressing the meeting, would you please just remember to turn the microphone off? But don't worry, if not, I'll just give you a reminder. And of course, just the general housekeeping that those in the chamber, just remember that everything can possibly be seen that's on your desk or on PC, laptop or whatever could be actually transmitted across the airwaves. Have any declarations of interest from the committee? You could please make them now, but if you find as we progress through that those interests then come to your mind, it's absolutely fine to flag them up then. Councillor Davey.
I'm a member of the KIP board.
Duly noted, thank you very much. Any others at this time? If not, don't worry, we can come back to it. That takes us to public questions, but I don't believe we have any public questions. Is that correct? Everybody in tune with that? Lovely. Then that takes us straight on to item 4 in that case, on pages 3 to 48 of the agenda. Recommendations are on page 3 at 2.1 to 2.2. Jonathan, is this one yours, I believe?
Thank you very much, and good morning, everyone. This report presents the annual governance statement for the financial year 2021 to 2022, and also the local code of governance. The purpose of my report is to report on our annual review of effectiveness, provide updates on progress from the previous year, to communicate any new governance issues, and also to provide an update on our local code of governance. So to just extract some highlights and key points from my report, in the agenda pack, so we start off on page 4, which is paragraph 3.2. This background information just explains the scope of the annual governance statement, our arrangements for compiling it and also for reporting it. I would probably also like to highlight on the following page, page 5, significant events, which is paragraph 3.6. Good practice from our professional bodies is that we include a section about the COVID-19 pandemic, given its significant impact on our governance arrangements. We did do this in last year's annual governance statements, so the commentary has changed, but the approach to including it is the same. And the other thing I would like to draw his attention is paragraph 3.11 on the same page, which is the Financial Management Code. Again, good practice from our professional bodies is that we include some commentary on the compliance with the Financial Management Codex. But in summary, we are compliant, and furthermore, my internal audit team have validated that this year by undertaking some audit work. So that's good positive news. On paragraph 3.12, this is where we detail the process for approving the annual governance statements. And in this section, I probably raise awareness of paragraph 3.15, which is when we produce our annual governance statement for the committee. Of course, at that stage, it is published as a draft document. But I can see that later on in our agenda pack with the statement of accounts on page 156, the external auditor has stated that they've reviewed the annual governance statement and can confirm it's consistent with their information and audit of the financial statements. So that's good. That's positive assurance from them. Moving on from that, we have the local code of governance. So starting on paragraph 3.17 on page 6, we maintain a local code of governance, and I keep this updated throughout the year. What we try to do with the local code is we try to include substantive permanent controls, things which help contribute to effective governance arrangements. And that means that we don't have to continually repeat these in the annual governance statements. Now that helps us maintain the AGS and keep it a more brief and focused document. And the local code of governance itself is attached in Appendix B. But not a lot of changes from last year, you'll be pleased to hear. What I would make you aware of is that on page 31, we make reference to having a single equality scheme. All that's happened there is that it's been revised. So the dates have changed from 2018 to 2021 to now stating 2021 to 2024. So quite a minor change there. And then further on page 47, one thing that as members and officers we have to follow is the 7 principles of public life. And just to raise your awareness, that did change throughout the year, and it's a minor change, but I can read it out. The holders of public office should promote and support these principles by leadership and example. That has now changed to holders of public office should exhibit these principles in their own behaviour and treat others with respect. They should actively promote and robust and support the principles and challenge poor behaviour wherever it occurs. So it's much the same as before. It's the same principle, but the Nolan principles have been updated and refined. So we just want to make sure that that's reflected in our document too. So in conclusion, the annual governance statements and local code of governance have been produced for the financial year. It accompanies the statement of accounts, which follows next on the agenda. The legislation states that the committee should approve the annual governance statement in advance of the statement of accounts, so that's why it comes up first on the agenda. Those are just the key points I wanted to bring out. Happy to take questions or comments.
Any questions? Councillor Bennett.
I just want to say very briefly that from what I've seen of the operations of internal audit, that this is a well-managed function. I would pick out particularly the fact that no grant-related frauds have been detected, and I'd like to thank the team for their work.
Any others?
Thank you very much.
Councillor Carling, go ahead.
Thank you. Very briefly, just on page, one second, I think it's page 20, I'm trying to find it. Yes, it is. Just at the end of section principle B, on the local government, not the annual government statement, it says, we continue to consult and engage with stakeholders, including biodiversity supplementary planning document, Greater Cambridge local plan, preferred options. I'm just wondering if you could kind of go into a bit of detail about how that sort of evidences engagement with stakeholders, because those are documents rather than stakeholders. I just wonder if you would mind commenting on that. Thanks.
Thank you, Councillor Carling. There's probably actually not a lot more that I can add to that personally, because I wasn't directly involved in that. It's just in that section we are trying to provide evidence of where we have sort of done various types of engagement. I think the leading statement we've got there, engaging with stakeholders, it is a broad statement. Whether we do it via documentation or face to face, it's just a general statement, and it's just an example which follows.
Councillor Thornbury.
I can add a little bit to that answer. The consultation for the Greater Cambridge Local Plan preferred options, we had 8,000 responses, which is is hugely more than any other local authority has had for a local plan consultation. They're normally a few hundred, and this was thousands. And it reflects the very hard work that's gone into moving the consultation into a digital format and trying to reach people. But there are lessons from that we've learnt about the age range of those who responded and the ethnicity within the city that responded. So we've got some good lessons to continue learning about engaging with all those who are involved in the city. Thanks.
Actually, just a small typo, that after including, there should be the word upon or the phrase in respect of. And that's really the answer.
I would be happy to make that amendment. Thank you.
Any other questions for Jonathan? Going once, going twice? Okay. Jonathan, I've just got a comment to make on page 25, where it says managing our recovery and resilience. I wanted to highlight this because of the statement that's contained therein. I hadn't intended to read the whole thing, but the UK has faced a sequence of significant ongoing macroeconomic shocks over the past 3 years. We developed and adapted our processes and governance arrangements during the pandemic, which continued into 21-22. At the end of the year, the war in Ukraine presented new challenges for the Council in ensuring refugees, guests from Ukraine were welcomed and safely housed. And the emerging costs of the living crisis raised the prospect of our many residents in the city facing further economic hardships in the months ahead. High inflation, a tight labour market, and supply chain disruption also create pressures and uncertainty. We will continue to respond to emerging challenges, that's the important bit, and seek new ways of working, including our communities and partners, to deliver the services that are important to local people. And I think that is an absolutely cracking statement, I really do. And in the face of all the challenges that we have, the excellent team we've always had in Cambridge City Council, yourselves and Caroline, have really stepped up to this. And I wanted to highlight that there are difficult times to come, and I think everybody here has absolute faith in the team opposite that everything will be done. And I just thought that was a really important statement to bring out this whole report. So I think myself and the rest of the committee thank you most profoundly for everything that you are doing and will do in the future, and we'll do everything to assist you. Thank you very much, everyone.
Thank you.
Sam?
Sorry, Chair, we've just spotted one minor thing over here. The report on page 13 says there's 6 executive councillors. Just to note that there's now 7, I think, because we added one this year.
Councillor David?
Happy to update that.
Okay, same thing. Okay. In that case, if everybody's happy to go to the
Excuse me, Chair.
Did I forget something?
Sorry, I raised my hand. I mean, can I ask questions online?
Oh, yes, of course you can. Sorry, that is entirely my fault. I'm looking around the chamber and not at the screen, so blame the chair.
Thank you. Just a quick one also about resilience. Obviously, it mentions COVID and financial problems, but I think there's a non-zero chance of power cuts, energy shortages. And I know, for example, that the university is preparing for it, or at least makes, prepares for possible power cuts. And I was just wondering if that's part of your plan as well. Thank you.
Thank
Can I
you.
just
Yeah,
ask who were you directing? Were you directing that question to Jonathan or to Caroline?
I mean, whoever feels in the best position to answer it. I mean, probably both.
Okay, I think Jonathan was going to respond and Caroline's also got her hand up. So who wants to go first? Jonathan, it's yours.
I don't mind. All I can. I was just going to report back and say yes. We do recognise that as a potential hazard, so we are alert to it. And I think the management team I've certainly been witness to and part of have already been considering that as a risk and having discussions. I mean, hopefully it doesn't materialise, but we need to be alert to it. So yeah, it is something that we've been having discussions around. I don't know if Caroline wants to add anything more to that.
Not really, but it is certainly something that we've been discussing as a management team and our emergency planning processes, and what we could do both to continue our operations and to support local people if we were to have power cuts.
Councillor Bennett. And here's me as chair thinking I had the last word on this. Obviously not.
Apologies. I just did want to raise an issue, which is my perception of our finance internal audit function is that it's very strong. That's not the public perception, and I do think that is something that needs to be addressed. I regard this as what we call in the profession a coffee stains issue. The phrase was famously coined by a British Airways chairman saying, if there are coffee stains on the passenger food trays, passengers think that we haven't maintained the aircraft. And I think it's actually incumbent upon us as members to avoid coffee stains. And I think we're all aware that we have a huge black hole in our expenditure, which I think we need a types of expenditure, which we need to be seen very clearly to avoid, to ensure there are not perceptions of mismanagement and poor control. I'm not going to go into detail because I think we're all fairly clear which ones we're talking about. But I do think it has to be a lesson for members going forward and something that we're all going to have to deal with in group in terms of motions. Just.
Thank you. No, that's a fair point. Thank you very much. Caroline.
Just like to clarify that I think the black hole I think that Councillor Bennett is referring to is the savings requirement we have in our future budgets, and I would just like to assure her there are no black holes in our accounts.
Apologies, I was using the term loosely. I am not suggesting that there is unexplained financial deficits. We have a very clear idea where our financial deficit comes from and where the blame lies. Apologies, Caroline.
I'm glad you said that, Caroline. I thought, hello, have I missed something here? So my next question was going to be, what are they? So now I know. Councillor Debbie?
I was going to make exactly the same point, so at the risk of repetition, there is a potential black hole. But I think the point is well made, though, Councillor. We have to be very clear about how we find those savings, and I think we mustn't miss your first point. The services we're given as councillors are excellent, and I think that should be noted, and to be grateful for the work. Thank you, Councillor.
And therefore, I stand by my previous statement. Okay, so are we ready to go to the vote? No, you have two choices, of course. We can take 2.1 and 2.2 together, or you can take them separately, whichever is your pleasure. Okay, everybody happy to take them? Okay, all those in favour of 2.1 and 2.2, please show. Thank you very much. And then that takes us to item 5 on page 49. And the recommendations are on page 50 at 2.1 and 2.4. So I believe, Caroline.
I'd like to hand that over to Neil, please, to introduce this item.
And this will be Neil's first address to this committee. You are most welcome. We don't bite.
Thank you, Chair, and good morning, everyone. This is my first formal committee meeting since joining the Council in mid-October. My name's Neil Krajewski, and I'm pleased to introduce today's report as the Council's new Deputy Head of Finance. Now, since I joined, I have been involved in supporting the audit process, but it wouldn't be right for me to take credit for the achievement of others, because much of the hard work was done before I arrived. It's really important to note that this year the Council was able to finalise its accounts by the 31st of July. Now, whilst that was the statutory deadline, this was something that only 63% of lower tier authorities in the UK managed to achieve. So it was really pleasing for everyone in this room, I'm sure, to note that we were able to hit that deadline amidst some challenging circumstances. Now, the City Council's accounts, as I'm sure you're all aware, are a complex document, and the complexity does mean that compared to some other authorities, there are disclosures that we need to include in our accounts that would not necessarily be found in the accounts of other similar organisations. Nevertheless, I think it's important to note that our other significant achievement this year as a council has been to condense the final accounts document. Those of you who have been on this committee previously will note that this year's document has been streamlined, and that is very much consistent with what we've been encouraged to do by CITFA and other interest groups. The accounting standards that we work to are quite exacting, and they will inevitably contribute to the length of the document. But what I think we have now, and I hope everyone in the room can agree, is a more concise document, and we hope that that means it will prove to be more accessible and user-friendly, not only for officers and members, but also for residents and other people who may have an interest in our financial position and our financial statements. Now, hitting the deadline, streamlining the accounts, both of those things would be of questionable value if the accounts that we'd produced were found by the auditors to contain errors or significant omissions. Now, hopefully you've had the chance to read the reports that are on today's agenda, and you'll be aware that this isn't the case. Instead, it's really pleasing to note, sitting here at the start of November, that this year's audit is nearing its conclusion, and the auditors have not identified any material misstatements or significant disclosure errors. What I'd like to do now is just to hand over to my colleague, Francesca, who's been the lead officer, who's been involved in preparing the accounts and supporting the audit process over the last few months. And Francesca will talk through the detail in the report, and we will then hand over to Jacob from EY, who's here to talk to the audit results report that EY have produced. Frankie, Jacob and I will then be happy to take questions before you're asked to consider the recommendations. The recommendations, as the Chair has mentioned, are presented in a particular order, allowing you to consider Jacob's report before moving on to consider whether to approve the accounts and give authority to approve the letter of representation. It's worth noting that we're not in a position at this stage to finally sign off the accounts because of the audit work that is still ongoing that Frankie and Jacob will talk to, but nevertheless I'm pleased to be in the position we're in at this stage with still some time to go to the statutory deadline of the 30th of this month. Thank you.
Morning, everyone. So, on sort of a brief overview of the statement of accounts, in terms of the financial results, which is in section 4 of our report, so we have an overall decrease in the council's usable reserves in 21-22, decreasing by 13.6 million. This is sort of split between capital and revenue expenditure. So there are reserves which can only be used to fund capital expenditure, and those show a decrease of 2.3 million. In terms of usable revenue reserves, there's a decrease of 11.3 million. That is sort of split between general fund reserves, which are earmarked for specific revenue spending, and a big decrease was seen in that area due to an amount we'd set aside for collection fund deficit for 2020-21, which has since been repaid, will be repaid over 3 years. So there'll be further decreases in that reserve. Offsetting that, there has been an increase in general fund unallocated reserves of 8.9 million, which is good to see given the challenging times that are ahead, that our general fund reserves have increased slightly in 21-22. In terms of group, so we have to provide a group statement of account, which includes the KIP joint ventures. This year, well, 21-22, we've seen profits posted in both Mill Road and Cromwell Road since the sale of a lot of properties on those developments. So we've got the share of net assets of the joint venture entities totaling 5.4 million in the council's group accounts, which is really positive to see those funds sort of coming back into the council. In terms of the audit process and the sort of the preparation of statement of accounts, so as Neil's touched on already, we've got a few areas still outstanding that ourselves and Jacob and the rest of the Ernst & Young team are still working on, which Jacob will be able to talk through in his report. But at the moment, a lot of those are seeming optimistic that we're going to get those resolved, including the infrastructure assets sort of area, which is a sector-wide issue at the moment. I'm sure ourselves, if you've got questions on those, ourselves and Jacob can sort of elaborate more on that issue. In terms of the results so far, so again, as Neil has already mentioned, we have not at this moment got any material misstatements and are optimistic that there will not be any sort of coming out of the woodwork after this. We've had a small number of adjustments to the published draft accounts, which have been amended in the copy of the accounts that you've got currently. These are sort of minor narrative disclosures, so corrections to small disclosures or additional narrative that EY have asked us to include, and we've changed all of the things noted, but we are really pleased with the statement of accounts that have been produced this year in their shortened format, and hopefully Jacob and EY are also happy with the new format. So thank you.
Thank you, and I'll move you into our audit results report now. As Frankie and the finance team have alluded to, we are significantly through the audit and are coming very much to the back end of the audit. We have got some outstanding areas which I will talk you through, but first I'd just like to bring your attention to page 125. So as the committee may recall, we did bring our audit plan to this committee on the 13th of July. That audit plan is largely unchanged, so there haven't been any new risks identified or any change in the risk profile, but we have identified 2 changes to our scope from that plan, which I'd like to bring to your attention. So our materiality level, whilst our basis for materiality and our materiality calculation is unchanged, that is based on the draft accounts now rather than the prior year the signed accounts. So that has had an impact on materiality, reducing our materiality to 2.6 million and our performance materiality to 1.95 million. That means that any misstatements over 0.13 million would be brought to the attention of the committee rather than a slightly higher level that we had at planning. There has also been a change in group scope. As mentioned earlier, the results of Mill Road, as well as other KIP bodies, have now become profit-making. So where they have been brought into the accounts at a highly immaterial balance in the past, we have, in particular for Mill Road, noted that this is now a material balance, and this therefore requires some additional procedures. Mill Road is audited independently by a separate auditor, but part of our work is then to ensure that their work is up to the standards that we would require to issue our opinion over the group accounts as a whole, and that work is still underway. It's fair to say that there have been challenges in this audit, and we are sort of further along the process and the timeline than we initially set out. That is largely in response to the sort of numerous risks we have raised, risks that are not unique to the city particularly, and are prevalent across the sector as a whole, which is taking a significant amount of time, both from the finance team side as well as the audit side as well. When this report was provided to you, we had our outstanding list on page 126. The majority of this does remain in progress, and I'll update you on each item in here in turn. So in terms of creditors, our work on the 21-22 numbers is now complete, and there have been no issues or adjustments identified. We have, however, identified that both debtors and creditors were overstated in the 2021 numbers. So just to sort of step back and explain this one. So this has no net impact on the account. It has no general fund impact and no collection fund impact, but this has been identified that balances were offset in the creditors and debtors lines within the accounts. These should have been reflected gross, as those balances are actually settled separately. So as I say, there's no net impact, but as the balance or the adjustment is material at 23.7 million, it is a material adjustment going through in the prior year. But as I say, there's no general fund or further impact on that other than a reclassification between two lines of the balance sheet. In terms of the valuations work, so both item 2 and 5, investment property valuations and other land and building valuations, there are still a number of audit queries that currently sit with the council's external valuer. These have been with the valuer for a number of weeks and are continuously being chased. This will then require additional work from our EY valuations team as well. So that's probably the biggest piece of work still to conclude on. The pension liability, the council are awaiting a revised IAS 19 report, as is in the council's introduction to this report. This is, again, not unique at the city, but a sector-wide and specifically a local adjustment. This is a timing difference more than an error or something that we haven't seen in the past. This has come out for the last number of years, and it's to do with movements in the asset values. So the work of the pension fund auditor has identified that there is a movement above our reporting threshold but below materiality, that the council then are required to obtain a revised report to quantify that precisely. In terms of infrastructure assets, and I'm happy to talk about this one more, but we did talk about the theory at the when the audit plan was provided, as this is a risk area. So the council have gone back and been able to provide their assessment of their infrastructure assets and conclude that they are code compliant. This is currently with EY to review fully, although from an initial review it does look as though we'll be able to get comfortable that materially the council are compliant with the code's requirements, as an area that again is consistent across the sector and one that has been particularly challenging for a number of authorities. This does need to go through a sort of internal consultation process to ensure the right people have looked at it, and that work is now underway, having had all responses from the council. Receipts in advance, again, was in the council's own report earlier. There has been an adjustment identified in respect of Cambridge Live balances, where balances held on receipts in advance are related to events that have either occurred or have been cancelled. This has been broadly calculated at around 180,000, so it's close to our reporting level, just above, but not material. And the council are currently quantifying exactly what that adjustment sits in terms of the specific individual events. And again, I understand they're quite close to having a final position on that and are planning to adjust the accounts when finalised for that. Group accounting I talked about in the last section, so we are awaiting response from the Mill Road auditors to be able to conclude that their work is of the sufficient standard that we would have done if we were auditing that body separately, to give us a conclusion on the group opinion. Going concern, this could potentially sit in the second section, I guess, of closing procedures. So the council have done an assessment and provided all the information for going concern. But as we are required to assess that 12 months post the opinion signing, that does sit as a closing procedure. In terms of journals testing, I guess this is the good news. That work is now complete and there have been no issues identified through our journals testing work. On to the next page in terms of value for money. The committee may recall that last year was the first year of us issuing a commentary on the council's arrangements under value for money. We have again completed our risk assessment on this work and have not identified any significant risks in respect of the council's arrangements. We will be issuing the final VFM commentary as part of our auditor's annual report. So once the audit is fully concluded, we issue a auditor's annual report of which the VFM commentary will form part of. But section 3 has more details on the procedures performed to date. And then on to page 129. So this is the risk areas, and we have talked about a number of these where work is still underway, but just to run through the ones where work is completed, and to note that we have no matters to report on the risk areas completed. So we have completed our work on the fraud risk, management override, inappropriate capitalisation of revenue expenditure. We've completed our work on that testing with no matters to report. We've completed our work on the change in payroll system with no matters to report. We've completed the work on COVID-19 grant funding, and again, no matters to report. We've also completed our work on the appeals provision, on the council dwellings valuations, and on the bad debt provision and recoverability of debtors, and for all of these areas have no matters to report. The following sections sort of pad out the details of what I've talked through, so I'm not planning on going through any of the sort of detailed sections, but happy to take any questions that the committee may have at this point.
Thank you much, everyone. Questions? Well, I'll move on quickly. Councillor Davey, you know you've got to be sharp when I'm here.
Let's start off, and I suspect Councillor Bennett and I will echo this. Thank you for the concise nature of the report in comparison to previous years. This is really welcome. It feeds into, I suppose, the budget setting review that we've been undertaking over the course of the last 12 months and prepares us for the way forward. I think it really is welcome. And not only that, I would probably be urging all councillors to read certainly the first 10 to 12 pages of the statement of accounts, because it gives a very good overview, not just of the finances, but of the council and how it works. And it seems such a shame that sometimes finance is buried away in the minds of other councillors, whereas in fact this is really important stuff. And therefore I'm very grateful for the work that's been undertaken by you all. So thank you. I think that if I can, I've got one or two questions. I suppose if I can break them down, they tend to revolve around, well, there are three in essence. Is there a timetable for the resolution of the EY at end of the report? And I suppose linked to that is that whilst I heard what Jacob said about sector-wide issues, are there any that are specific to the City Council that we need to do something about? So those are sort of two questions in one. And then there's a linked one, and you can probably understand my interest in that. It's to do with KIP, and is there things that we can do, and I can do as a board member, to hurry along the arrangements between EY and the KIP auditors, ensure that this is resolved swiftly. I think that'll do as a start. Thank you very much, Ross.
Thanks, Councillor Davey. Francis, are you responding, or is Jacob responding?
Yes, certainly I can start. So I'll take them in order. So in terms of the timetable for audit, I think it's fair to say that a lot of the outstanding work and the key outstanding areas sit outside of audit, or initially sit outside of audit and outside of the finance team. There are sort of external factors that they're waiting on, such as responses from valuers, etc. So yeah, we'll be led maybe by Francesca and team as to if they have any indication as to responses and the timeline for that. We are clearly working through to finish as soon as possible, and we are close, but there are those external people and factors that we're waiting on. In terms of specific council issues, I think this year has been more challenging, and the recruitment of Neil behind me is probably part of the response to that. It's clear that there have been challenges in response time, but in terms of looking forward, it looks like the council have put the right measures in place to fill those gaps. So nothing jumping out initially as to sort of more to do going forward. In terms of the KIP bodies, so the KIP auditor have concluded their audit, and we have got signed audited accounts, which show no changes from the draft accounts that have been linked into the council's group accounts here. It is seeing the sort of documentation of their work, their equivalent of the results report and things like that. So I'm not sure whether there is anything to push that along. It is sort of the documentation and seeing the work that they've done behind it. But yeah, they have concluded their separate audit of those bodies.
The reason I made that comment is because I'm fairly sure I signed them off. And therefore I'm slightly puzzled as to why there might be some lag.
Sure.
I suppose that's the obvious reason for that question.
Yeah, so I guess just to clarify for the committee, so yeah, the KIP auditor have concluded their individual audits of the individual components, and we have got signed audited accounts. It is the sort of additional level of, is that audit up to the level that we would expect, and doing the work to document and evidence that.
Thank you.
I have Councillor Hawke online, so I'll take him first if that's okay, and then followed by Councillor Bennett. Councillor Hawke, it's yours.
Thank you, Chair. I've got three broad questions, which I hope are not going to take very long. Now, the first question is about the delay of the audit that was mentioned already, and it sounded like everything is well on the way, but I was just wondering if maybe the Deputy Head of Finance could just update us. So when you think you'll be back on target again, because I guess delays of the audit could potentially have consequences further down the line. So is there a plan already? So when we are going to be back on target? The my second question is about the defined benefit pension scheme. So with the recent news and the narrowly averted breakdown of our financial system, I was just wondering if there's any, and the change of interest rates that are probably coming soon. I mean, does this have any effects on the pension scheme that now need to be taken into account in addition to what has been done so far? And finally, more comment. When I looked at the action plan, and I haven't been on this committee for that long, so I haven't really seen many of these documents before, it didn't really look like an action plan to me. It looked like more general statements. So I was just wondering where else will the actions be reported that result from this audit? Thank you.
Are you taking this one? Whoever actually feels so disposed.
Yeah.
I can do the pension one.
Okay. Councillor, for your question. So I think in terms, the question, as I understood it, was to understand whether the delays in concluding this year's audit may have a knock-on effect that kind of carries into future years. I think my view would be that, based on the fact that at the moment the work that remains is around actually providing evidence that external parties are responsible for, it's not significantly impacting on the activities of the finance team in terms of doing our day-to-day work, which we would normally be doing around this time of year, which obviously feeds into the budget setting process. As far as subsequent years are concerned, I feel that the work that my predecessor did with Frankie and with Caroline and the rest of the team puts us in a really good place to continue to be able to produce a draft set of accounts on time. There's always scope for improvement, ways for doing things differently and more efficiently. But I do feel that we will continue to be in a place where we can provide the accounts to EY colleagues on time, in line with the statutory timetable. And then it really comes down to a discussion between ourselves and EY about the scheduling of the audit work to enable the audit to be completed on a timely basis, and ensuring that the external experts that we work with understand that timetable and are able to work to it too. So at this stage, I've not got any particular concerns, but I think it is widely acknowledged that there are significant challenges affecting the external audit sector in general, which do make, ensuring that all bodies receive their audits on time and are able to sign off by the statutory deadlines quite a challenging situation at the moment. I don't know if Jake has got any specifics that you might want to reflect on from an EY perspective.
Probably not. I think Neil's hit the nail on the head with that one. We did set out a timetable in our plan. We are sort of beyond the back end of that timetable, but large parts of that are sort of outside of the direct control, I guess, of the council. But definitely things to think about going forward as to how we can bring that back in line and make those external bodies respond in the sort of timely way that both the finance team and audit need to conclude the work.
I think I'd just like to add to that we do have a deadline of the 30th of November, and I think we will all be trying to make sure that we hit that. We are dependent on others, but we are, I think, chasing and encouraging them as much as we can at this point. I'd just like to pick up the pensions question. I think we've already heard that we're awaiting an updated report, which of course will refer to the end of this year that we're looking at. We have had information from our pension scheme. They have kept communications up with us as a admitted body to that scheme, that they at present are confident that the pension fund is operating on a very long-term basis, and this is a unfortunate, but it will be in terms of the pension fund sort of times on which they operate, a relatively short-term decline, and that they plan their investments for the long term to ensure that they can pay pensions when they become due. I will be going to an employers forum in a couple of weeks' time, and we will no doubt hear more about that. But at the moment, I don't think there is any indication anywhere in the literature or in the media that there's any problem going forward with the local government pension schemes. And while I've got the microphone, can I ask that we record our thanks to Jody Etherington for the work he did on these accounts. He was very determined before he left us that he would finish the process of streamlining them. And hopefully you all agree that that has been a very worthwhile exercise. So if I can just record my thanks to him, please.
Councillor Bennett, I believe the floor is yours.
Thank you, Chair. I'll try not to be too long. You talk about recommendations on page 50, and particularly 2.3, that we're delegating authority to approve any amendments, statement of account, blah, 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 that may arise. As you know, it mentions authority be delegated to the chair of meeting in consultation with the opposition spokes. Could I ask if that includes the independent spokes as well?
I think that's a really good question, Councillor Bennett. And actually, I've got 2.3 starred as well to ask a similar question. If I may just, it's really Caroline's response, but to me, I think that's perfectly reasonable.
Thank you. I know
That also saves me asking the question as well.
And And I also had a further question, which is, assuming that the independent spokes, i.e. me, is included, I feel I would like to defer to my colleagues Sam, Olaf and Katie to ask whether they're comfortable with that deferment to a smaller group.
Yes, I have no objection.
That's okay to me, Councillor Davey?
I have no objection.
Thank you. And I've just got one general point, which is that we've got used to not dealing with inflation in our financial accounts. I still have to repress a small shudder at dealing with inflation accounting in my salad days as a very young accountant. But I do want to mention something that Francesca's comment about reserves awoke in me, which is that, of course, our general fund reserves may have increased in monetary terms, but they haven't increased in real terms. I don't really understand how a reserves target is set and whether that needs to be adjusted in real terms rather than monetary terms. And I very much welcome some input from Caroline. And I apologise I haven't raised this beforehand, but it has only just occurred to me to ask. So I apologise for that. Thank you.
Are you able to answer that today, or did you want to come back to Councillor Bennett?
Give a high-level answer, and then if Councillor Bennett would like more detail, we can do that offline. I think issues here. The first is, yes, the numbers are, as you rightly say, have less buying power now than they did a year ago. When we set the prudent minimum balance of reserves, so that's the amount of reserves that we feel we really should hold on to, and act as our, I suppose, contingency fund in a way, we do a sort of risk-based calculation, and that calculation is based on our expenditure budgets. Now, those expenditure budgets are inflated. We inflate them every year, unless decisions are made otherwise. But in the case for this year, they are being inflated. And therefore, when we look at the risks of the different type of expenditure, and calculate sort of probabilities, that is based on inflated amounts. So de facto, that prudent minimum balance is inflated. And going back to the MTFS, which was approved in October, there was also a slight increase in that prudent minimum balance to reflect the sort of current uncertainty and increased level of risk. I think that's one aspect of reserves. The other aspect of reserves is that we hold cash. The cash that backs those reserves, we do invest. And whilst we can no way make up the cash value of that, because investment rates are 2, 3, 4, inflation is currently 10 plus, we do what we can to maintain the value of the cash that backs those reserves.
You're entirely satisfied with that answer?
Any more questions from members here? Okay, thank you. I've got one more that's been emailed in from Rod Bennett, our independent observer, and so I just want to cover that now, and that refers to page 51 at 3.4 is the question that Rob has asked relates to that section, and Caroline has kindly said that she will respond to that as best she can. Or maybe not.
I think that question is probably to be responded from either by Jacob or Frankie. Do we
Absolutely
need
fine.
to read the question out?
I don't have the question in front of me.
Oh, I do, if I can, should be able to just bring it up. Okay. So item 5, para 3.4, I note that work is ongoing to quantify the error identified. It will be important to receive the update so that members can be assured that the amount is not material. Again, on item 5, there is a lot in the EY report stating that updates will be provided. In particular, it would be useful to understand the latest position on accounting for infrastructure assets and any implications for the accounts. There is also reference to a capacity issue in the finance team during the audit. It would be good to hear from officers that they are confident that this has been addressed. It was good to read that there were no uncorrected misstatements at the time of drafting the EY report and that other minor adjustments have already been made. I think looking at those, we have probably addressed the capacity issue on the finance team. We have, I think, addressed also the accounting for infrastructure assets and where we are on that. 3.4, I think, was the receipts in advance. And I think, are the committee content that we've addressed that as well during discussions?
I think everybody's happy with that, yes? Yeah, everybody's happy with that, thank you. Okay, I only had one question, but I think has also been answered at 7.2 due to current uncertainties regarding the infrastructure assets referred to in 3.7. Final version of the letter of representation has not been prepared by EY for formal sign-off. In all material aspects, the final content and form of EY's letter is not expected to differ from that set out in Appendix C, and I think we've covered that in our discussion as well. Is everybody happy with that? I feel we've covered that, so if the committee are happy with that, was my only question that I actually brought with me. In that case, are we ready to go to the vote? Everybody ready for that? Okay, in that case, how do you wish to do this, en bloc or section by section? Yep, everybody happy with that? I normally am, but I like to ask, just in case there's any dissent with that. Okay, in that case then, recommendations 2.1 to 2.4 on page 50, all those in favour of those recommendations?
5-0, Chair.
Thank you very much. And unless I'm much mistaken, and you know more than I do, I believe that concludes the business for today's meeting. Thank you, everyone, for turning up. And those online, of course.